I'm Srikumar from the corporate ratings team at ICRA Limited. In this podcast, I'll be sharing the recent trends in the automotive sales across segments. Domestic auto sales in Q1 FY27 point to a healthy start to the fiscal, with the growth trajectory appearing broad-based rather than being driven by any single segment. The performance largely reflects a combination of favorable macro conditions, rural-led demand recovery, seasonal tailwinds, and improving affordability. Although, part of the momentum also needs to be viewed against the benefit of a supportive demand environment and channel restocking at the beginning of the fiscal year. Within segments, passenger vehicles continue to be supported by the structural shift towards utility vehicles and premium variants, while the revival in entry-level and rural demand indicates some broadening of the customer base beyond urban markets. Following a strong 25% plus year-on-year growth on wholesale terms in the first 2 months of the year, the momentum continued in June as well for most of the players, despite the price hikes taken by the OEMs. Two-wheeler growth appears more encouraging from a volume and demand quality perspective, as it reflects improving rural cash flows. This apart, replacement demand and better affordability in commuter categories support the growth. In this segment as well, a stronger growth of over 20% in the first 2 months, again on wholesale terms, was maintained in the month of June. Notably, the scooters have grown at a much sharper rate. The month also witnessed the two-wheeler EV penetration levels touching double digits for the first time, reflecting a steady shift from the ICE engines. Commercial vehicle sales so far have grown in double digits, largely aided by infrastructure activity, freight movement, and replacement-led demand. However, sustenance of the same will depend on the monsoon progress, fleet operator profitability, freight rates, and financing conditions. Overall, Q1 FY27, the demand growth reflects two things. One, the positive momentum built during H2 of last financial year has continued, and the underlying demand conditions for the auto sector being constructive, both in rural as well as urban markets. This is despite the headwinds from the supply chain disruptions, price hikes by OEMs, etc. That said, the growth may moderate in the subsequent quarters as the base normalizes and the seasonal factors fade. The key monitorables will be the durability of the rural recovery, inventory discipline by the OEMs, financing availability, the trends in commodity and fuel prices, and the extent to which new launches can sustain consumer interest. Will the demand trends sustain in the ensuing months? Please watch out for our next podcast to know the same. Thank you.